The Bible says, be not deceived. Whatsoever a man soweth, that shall he also reap.
All right, it's 4 p.m. on Wall Street. Do you know where your money is?
How much should I invest?
I really looking for some direction.
Should I hold on to my house as an investment for my future?
What should we do to have money that we're putting aside?
Welcome to Financial Issues, where we align reality with truth. Conservative talk radio you can count on. Financial issues that you need to know.
We face a disintegrating economy, a weakened defense, and an energy policy based on the sharing of scarcity. We will simply apply to government the common sense that we all use in our daily lives.
Now, here's your host, Dan Celia.
Good morning. Welcome back to Financial Issues. It's Friday. That means Rapid Fire Friday. It's when we try to take as many calls as we possibly can in as quick a fashion as we can. We ask you to keep your questions or comments to the point and quick, and that will help us move on to the next caller. We have been taking, it's almost been like a rapid fire week since we've been taking so many questions, but some of them have been a little bit longer than we like on Friday. Friday, we want to try to move through as quick as we possibly can. So we hope we can do that. It's usually my fault. But it's hard for me sometimes to let go to a coachable moment when I have an opportunity to speak to the broader audience about a specific thing. So that's what I try to do sometimes and get carried away. But we're going to try. We're going to try it again today, 866-300-9298, 866-300-9298. All our lines are open. Well, all but one of our lines are open. So if you want to queue your call up, this would be a good time to do it. The other beauty about Rapid Fire Friday is we try to get through, again, as many questions as possible. I don't know what's happening. I don't know what's going on. I don't know if it's a fear issue or what, but I have just been getting inundated with email. I'm almost back to levels of 2 years ago, which I thought I finally had gotten away from a little bit. Not because I don't appreciate getting emails. I feel bad because I just cannot get to them. And I got an email from somebody that I did respond to, and they emailed me and said, well, I know that wasn't you. Well, let me just say this. I don't have this crack research staff. You're hearing most of my research staff right now. And the only emails that get answered by someone else, which would be my administrative assistant, are those things that have to do with an administrative issue of the website or something to that effect. So I would prefer not to answer at all than to have someone answer that might not give an answer that I would approve of. So if you do get an answer from me, which is getting more and more unlikely, it's not likely that it is likely and only coming from me, not someone else. But having said all that, that is becoming increasingly more difficult to do. I just get far too many. I've gotten to the point where I can't even get, I'm back up to the 1,500 level per day that I was a couple years ago. I appreciate it. It's hard for me. I look at that. There's so many nice things that people say in there, and there are so many things in there, I'm sure, that I would like to answer. I just can't do it. And so I apologize in advance. So having said all that, you got to hang in there and wait for the phone. It is the reason I take more phone calls in 2 hours than any other talk radio program in the country, I think. So I am constantly on the phone. I try to take as many calls as possible, even in the midst of situations that I feel that I've got to give or lend my commentary to, because I know many of you are concerned about that. You want to hear more of my opinion about certain things. And so I feel a need to do that. And I try to do it in the first segment of each hour, but don't always get that done to my liking anyway, because there's always so many issues, and there's only so many issues that I can cover in the midst of all the issues that are out there. So Let me just throw that out there. Also, I just want to say one of the great ways to stay in touch with me is to become a partner on our website at financialissues.org. It is what keeps this ministry thriving and alive. And it has been great. We have thousands of people that have been partnering with this ministry for years. I want to believe that it has been extremely beneficial for them to partner with the ministry, or they wouldn't continue to renew every year. So I appreciate their partnership. It is a support for this ministry. There is no better time to partner with me than there is right now. I send out email alerts on a regular basis. Sent one out yesterday. I've got stock buys on preferred stocks that aren't ever going to be on my list, or I'm not going to talk about on the air, that I am putting out strictly to my partners. I've got one coming out next week. Become a partner, if for no other reason, to get the preferred stock list that I send out by way of email to my partners. And I've got one coming out that I'm pretty excited about next week. So anyway, check it out. It's financialissues.org, by the way, financialissues.org to partner with this ministry. You're listening to, again, Financial Issues. I'm Dan Celia. It is Rapid Fire Friday. We're going to try to move as quick as we can. I've got some interesting data that has come out today. Consumer spending falls for the first time in 6 months. Really? Consumer spending for the month of July falls for the first time in 6 months. The reduction in spending last month suggests that the economy won't match second quarter GDP growth of 4.2%. Really? Now, how come I talked about that yesterday before I saw this number? Well, I did it yesterday because I saw the durable good numbers. I think it was yesterday, day before yesterday, talking about this very thing, that there is no correlation. Finally, we've got at least some correlation in consumer spending with one piece of news, and that would be durable good orders. So we got a negative durable good orders when we strip out airliners. We have a negative durable good numbers, and that would correlate at least with with spending being down. And this is the point that I've been making for the last 3 months. You've all heard me. I've written about it and I've talked about it. This idea that consumer spending, according to what I'm seeing, retail sales numbers, same store sales, traffic in stores. If you look at Walmart and Lowe's, for instance, both reporting year over year traffic down through their stores. Walmart, that has been a trend for quite a while. When you see those things, even McDonald's traffic down. So when we see those things, look, people aren't spending money. I am miffed at consumer confidence being up right now. I don't get that, but at least there's some correlation here. And listen to this. Also, something I said was going to happen, growth of incomes continue to go down. They slowed to a 0.2% pace for the month of July from a 0.5 pace. We continue to see wage inflation and incomes go down. Now, the good news. The good news is consumers. Bad news, by the way. This is bad news for the economy. But forget about the economy for a moment. The economy is not half as good as everybody thinks it is anyway, not even close to that. So this is some more bad news for the economy, yes. And by the way, Dow futures moved in negative position, moved negative on this news. But consumers are socking away money as opposed to spending money. Good for the family. That's what we care about. This is good for the family. We are seeing, listen to this, our savings rate. This is America I'm talking about. I am not talking about Japan. I'm talking about America right now. Our savings rate, 5.7%. Praise God. Here's what I love about that savings rate. That young, middle-aged, older people are coming more and more to the realization that they've got to continue to save and they got to continue to be out of debt and stay out of debt. There is a new day when it comes to consumers. Now, I've got to say this because it's an important note, but I know you're tired of it. I've been saying it since 2010. Back in 2009 and late 2008, I said on every interview I did after Lehman Brothers, I did 86 interviews in 2 weeks. And I said it over and over and over again and continue to say it. The mentality of the consumer from an investment standpoint has forever changed as a result of this financial crisis. And everybody that I said that to say, yeah, you might be right, but for how long? You'll be right for a year. Then what? I said, no, I'm not going to be right for a year. And I said in 2009, I don't care if the Fed does quantitative easing like they usually do. Now, I wasn't expecting them to do to the extent of which they've done it. But I said, no matter what they do, it is not going to help. There is no creating a wealth effect to pull us out of this recession. I said that on and on again. I am getting more confirmation in that 6 years later. I'm still getting confirmation as we see savings rates climb and consumer spending being down. Why is consumer spending down? Because people don't have the money, number one. And listen to this. And let's make, I'm trying to get somebody on this program that I'm excited about. I hope I can get him on. I'm not going to even say his name or make any promises. They can speak to this far better than I can. But the other thing, and I might have sent this out on Twitter this morning, I'm not sure, but I will say this. Look out 2015 utility bills. Look out. Look out 2016 and 17 utility bills. Look out at the self-destructing Obamacare, because we are going to continue to see rates climbing and climbing and climbing. And you know what? I'm not the only one making that prediction. There are millions of consumers making that same prediction. See, the consumers, Main Street, has figured it out. Hence, a 5.7% savings rate. Now, the economists have not been able to figure that out. These numbers that I just gave missed all expectations by the economists, not even close, because they're caught up in their own propaganda. They're all caught up in it. They're caught up in the government's propaganda, the government's inaccuracy, inability, or ineptitude to be able to put out the correct numbers. But the fact of the matter is, there is a change that is going on among consumers. That change is going to lead to change in Washington, I pray and I hope. And that change, I pray and hope, is going to lead to things like embracing capitalism, free market economies, and tax reform. We'll see. But that is the hope and the only hope of turning America around. So we'll have to wait and see. But these numbers, again, more confirmation of things that you know already. Why do you know that? Because you listen to this program. You've been listening to this program where we may not always be right, but we're always telling the truth. And we're always looking at all the numbers through a lens of nothing but truth, and truth that is far outweighing, in many cases, the so-called facts. And I emphasize so-called facts. 866-300-9298. Again, U.S. economy. The headline is the U.S. economy grew for the second quarter and as profits surged. Yeah, profits are surging, all right. Why? It's not because incomes are surging. That is a fundamental problem of the economy. It is a great thing for the markets and for those investors that are investing because of what they're seeing in the bottom line of manipulated balance sheets. Interesting. U.S. stocks snapped a 3-day winning streak because of, this is the headline, Ukrainian worries. Really? That was the worry last month. What happened to it? It went away. It's back? I didn't know it was back. I thought as soon as the market went up and there was no longer any worry about it, that obviously all the issues in the Ukraine were solved. Oh, I guess not. Isn't that something? How that has just come around again. 866-300-9298.
Hi, this is Dan Celia from Financial Issues. You have heard over the years some of the wonderful things that we're doing here at AFA Foundation. We have been doing so much work in the estate planning efforts and certainly in helping you plan for your permanent income. We conduct town hall meetings and seminars, and we're so grateful to educate our listeners in your stewardship. We would like you to continue in the planning process, and as a part of that, include the American Family Foundation. Call the foundation today to help with your planning needs. You can call them at 800-326-4543, extension 345. We're happy to help you with your complex situation of estate planning or, in particular, your planning for your permanent income. We hope you'll do that today. Make this the year that you plan. American Family Foundation, 800-326-4543, extension 345.
Financial Issues. I'm Dan Celia. Rapid Fire Friday. Hey, listen, I want to remind you before I get started real quick. Listen, I mentioned Summer Snow, the movie Summer Snow, right? When Summer Snow, it's the first feature film by American Family Studios. It is a great family, American Family Studios, family film. It is a great family film. Up TV said it was the second highest viewed premiere of any film they've had on Up TV. It is the highest so far this year. So that is just some great news, obviously, for American Family Studios, that they've hit a bullseye in the target with this movie, and it is a great movie. And if you've missed it, don't worry about it, because it is going to show again on Labor Day evening. So Monday evening at 9 p.m. Eastern Time on Up TV. Now, Up TV is on just about all the major, all the cable companies and Dish and DirecTV and such, so you won't have any trouble finding it. But it's Summer Snow is the name of the movie. It was written and produced by American Family Studios. So I hope you'll tune in Monday evening, 9 o'clock p.m. Eastern Time, 8 o'clock Central Time. Monday evening on Up TV. So I hope you'll do that. Rapid Fire Friday. We're going to try to move as quick as we can. 866-300-9298. Let me go to Nick. Nick is calling us from Illinois. Hey, Nick.
Hey, Dan, it's a pleasure to talk to you.
Thank you.
I'll try to be quick. I went to a bank to try to get a personal loan to consolidate 3 credit cards, and the interest rate they gave me, or they offered me, would be 2% higher than what the credit cards are. I know that credit cards tend to be screwy on how they do their interest rates. I didn't know if that would be a bad deal or a good deal.
No, I mean, I wouldn't do it, not just for the sake of consolidation. I would not do it. I would stick to what you have until you get one of those offers by another credit card company that allows you to consolidate for 0% interest for 6 months. When you get one of those offers, if you haven't gotten one, you probably will. I would probably take advantage of that, and I would, consolidate, take that credit card debt of the 3 and put it into the 1 at 0% for 6 months. And then, of course, you've got to take what they offer, which is usually fairly high. I mean, it's probably double digits or high single digits. But nonetheless, in the long run, it's probably still better. All the while, you can continue to plug away at the principal. But that's what I would do, Nick.
All right. Thank you, Dan.
All right. Thank you for the question. Good stuff. Let me go to Brenda. Brenda calling us from Arkansas. Hey, Brenda.
Good morning, Dan. How are you?
I'm well. Thank you.
Good. And thank you for being here for us. I have a student loan question. Okay. Is there anything that I can do to, I can't seem to get started paying on them, and now I have found out that the interest rate is going up on them to like 8.25. Mm-hmm. So, what can I do?
Well, what do you mean you can't start? You can't seem to get started. You mean you just can't because of your financial situation, or because?
That's right. Yeah.
Okay. Yeah. There's not a whole lot you can do. You're at the mercy of them, and they're going to continue to do that. But here's the other thing: while you're not paying, you're accruing even more interest that is being attached to your principal. So if you had a student loan, let's say of whatever it was, $10,000, in all likelihood, your principal is higher than $10,000, because the more you continue to put it off, the more you're accruing interest. And people think, well, I'm just putting it off, and I'm going to have to, spend more time paying for it and all those kinds of things. But that is not usually the case. You will spend more time, but it could get to the point, because of the accrued interest hitting the principal, you may be paying for it till you're 75 years old. Wow. So that is not only you're getting hit with higher interest. This is in the midst of, President Obama some years ago really pushing for more student loans and pushing Sallie Mae to make these student loans even easier and more affordable and available. Well, that was great. So we sucked in a whole lot more people, young people, into these student loans. And now they've got to pay the piper because, in the meantime, that's all ended, and we're seeing higher and higher student interest. And students are far worse off today than they were 7-8 years ago with the rules in and around student loans. So I hate to give you that news. I mean, obviously, you can always wipe it out by looking for another loan, by taking a loan from the private sector, taking a loan or refinancing that loan for that student debt. But that's hard to do when you haven't been paying on it yet. So nobody's going to do that until you have some payment record, some track record on paying. So, but at some point in time, that may be an option for you.
Okay.
All right.
Well, thank you very much.
You're welcome, Brenda. Bye-bye. Sorry, I can't. I don't have something better news on that. Let me go to Joe. Joe calling us from Ohio. Hey, Joe.
Hello. Thank you very much for taking my call.
Sure.
I'll make a comment about the Timothy plan. You advised me to change all my stuff over to the Timothy plan, and I'm glad I did. My financial advisor said it is really doing good, and she even called me and told me that, that's a good thing we did.
Oh, great.
My question now is, if we have this collapse,
yes,
is the stuff in the Timothy plan, is it going to be safer than, any other kind of investments, or should I look at maybe pulling some of that out of there and maybe putting it in some annuities or something like that?
Yeah. Well, I would say that no, in the sense that, they're going to have, like all mutual funds, they're going to have exposure to the markets, and feel the knock downward, and of course, the downward momentum is going to be based on which fund you're in. So obviously, it's not likely that the fixed income is going to drop down like the, growth fund is going to drop. So they're all going to drop at different rates depending upon which funds you're in. But here's the thing, Joe. Now, do you make any contributions to this?
No, sir. I'm retired now, so it's and I'm 72, so I'm not making any contributions to it now.
Are you withdrawing money on a regular basis to supplement your income?
We usually make one distribution a year.
Right, you're at your minimum required, but
right.
That's all you're taking at this point.
Yes, sir.
Okay, and I mean, my inclination is to tell you to hang in there. I'm going to assume that you have some. Do you have some emergency savings, Joe, and some things set aside in just regular old savings account?
Well, that's another thing I wanted to ask you. You had said something about having some cash, probably have some cash at home.
Yes.
how much would you suggest doing with that?
Well, I think you should just have a little bit of cash at home, even if it's $500 to $1,000, just in case we had a turn down so bad that, the banks felt the need to close for a week or two, that you'd have some cash at home. But I think that cash in a savings account at the bank is important, and you should definitely have some of that money that's very liquid. And if you don't, then I would suggest that instead of pulling this money and doing some other type of investment with it, I would rather see you take a little bit of this money out, turn it to cash, and put it in your savings account. I would rather see you do that. I wouldn't want to see you do any annuities or anything that is going to tie your money up unless you're ready to do a charitable gift annuity with a portion of it just to secure some permanent income. But other than that, I would keep things where they are. I don't know what funds you're in, Timothy, but you want to stay relatively conservative at this point. I would imagine that you are conservative in their more conservative funds. But
well, I told her whenever she was wanting to put it, do some different stuff, and I said I don't want anything in there that would promotes any kind of stuff that's not, pornography or abortion, any of that kind of stuff. Right. I said I want to be completely conservative with it, so that's what she's done.
Yeah, well, I'm talking about conservative from an investment standpoint where, so they have funds in Timothy that are far more aggressive, meaning there's more opportunity for growth in them, yes, but there's also more opportunity for movement on the downside. So when I'm talking about some of their funds that, when the market is through the roof, they're not going to set the world on fire, but they're going to protect some of your growth. So I would say that you ought to be in some strategic growth, defensive strategies, and possibly even their conservative growth. But I don't know, maybe just strategic growth and defensive strategies, those two funds in the Timothy plan, so that you're not being too aggressive. So I'm going to assume that she didn't put you in anything too aggressive, and I hope that is the case. But nevertheless, it would be wise for you to make sure that you have cash, and I'm talking about money market money in the bank, so that, and maybe you do, so that if you needed something and the market is down, you don't want to have to sell something that's down in order to get the cash. That would hurt your strategy. So I think you ought to, now would be a good time, if you don't have enough cash in the bank, to maybe, move some of this over into the bank.
Okay.
All right.
Well, I thank you very much.
You're welcome, Joe. Thank you for the call. Let me go to Larry. Larry's calling us from Georgia. Hey, Larry.
Hello. Thank you for taking my call.
Sure thing.
I'm at 66 years old, probably will work for another 2 to 4 years. I have 500 plus thousand in an annuity, 325,000 in a money market 401, and 180,000 cash in a savings account. Mm-hmm. I just want to know is that okay, or I'm debt free as well?
Are you drawing any of this money for income, Larry?
No.
Yeah, I mean, I don't now. So from the account standpoint, I would say that's fine. But I guess the bigger question is, what is in those accounts? So, you've got so much money in a retirement account, a 401k, a 501k. Oh boy, 401k or a 403b, whatever it is, and you've got some in an annuity. But what are the investments inside of that?
Okay, the annuity is paying me 7.5% a year on the income side.
Okay, and the other investments are
401k. I took out of the market and put it in money market.
Oh, okay. Well, I would say this. I mean, I think you probably are a little bit maybe too heavy on the money on the cash side. So you've got this 180 in cash, and you've got your 401k that is basically in cash. and you've got an annuity that is some sort of fixed income kind of thing. So I probably, if anything, would like to see you just, I mean, I don't know that I would do it right now, but at some point in time, maybe the end of the year, certainly not now, but you move some of that money over into a mutual growth, even if it's just the strategic growth fund, either in Timothy or a few stocks, just to have some exposure so you have a little hedge against inflation, and the idea that the market could conceivably continue to go up for another year or two, that you've got some hedge for that. But all in all, you're never going to get hurt where you are right now, and you're in good shape.
Okay.
All right?
All right.
Thank you, Larry.
Very much.
All right. Let me go to, let's see how much time we have. Let me see if we can go to Bonnie. Bonnie's calling us from Pennsylvania. Hi, Bonnie.
Hi. How you doing, Dan?
I'm good, Bonnie.
Great. Happy Friday.
Thank you.
Dan, I'm 71. I'm retired. My husband is 61 and still working full time. And we're looking at doing a furnace conversion from fuel oil to natural gas, which we already have piped into the house.
Mm-hmm.
Or should we pay off our mortgage, which is at $20,000?
So I would do that. I mean, you got to do the furnace. You've got to change that over to natural gas. I did it myself 3 years ago. It's the best thing I ever did. But this year is shaping up to look like not such a bad year for heating oil, but it's early yet, and anything could happen. I feel like natural gas is going to be far more stable and less expensive for a much longer period of time than is heating oil. So I would definitely do that. I wouldn't even hesitate. So I think you have to do that. As far as paying off the mortgage goes, is it strapping you? Are you okay paying the payments? Are you doing all right with that?
And we're fine, yes. In fact, my husband's been trying to, pay on the principal more, too, to pay it down faster.
Yeah, I wouldn't change anything there, Bonnie. I would keep doing what you're doing.
Okay, great.
All right.
Thank you very much. And
you're welcome, Bonnie.
Wonderful Labor Day weekend.
Thank you so much. You too. Thank you for the call. Let me go to Eric. Eric's calling us from, I'm sorry. Eric, hold on, brother. We only have 30 seconds. I didn't realize. 866-300-9298, 866-300-9298. You're listening to Financial Issues. I'm Dan Celia. It's Rapid Fire Friday. So far, we're kind of rapid firing. Pretty good. Let's hope we can keep it up. We got one line open, 866-300-9298. You're listening to American Family Radio Network. Financial Issues. I'm Dan Celia. We'll be right back. Hi, this is Dan Celia from Financial Issues. Like every ministry, we need to raise support to continue in the work that the Lord has for us to do. One of the ways that we do that is we ask you to help support the ministry by becoming a partner with us in the ministry. What you get for that partnership is access to our investment strategies. You'll get access to our asset allocation models, my stock picks that come out every Monday, our email alerts that may tell you when to buy or sell, or maybe give you comfort during a volatile time. It is an incredible value for $85 a year, and you get to support the ministry. It sure would be a blessing to us. Would you consider supporting Financial Issues and be a partner? I guarantee it'll be the best investment you ever make. Go to financialissues.org, financialissues.org to support the ministry. I sure would appreciate it.
Hi, Dan. I'm a partner with you, and I try to listen every day.
We need to peacefully bear arms. I'm speaking about standing on the rock and the foundation of Jesus Christ by which this country was founded upon. We didn't do it in the last election. Don't go blaming everybody else. It was the evangelicals that found it easier not to go to the voting booth at all. It was the evangelicals that didn't have the guts to stand up for what is right. Make no mistake about it.
I just want to encourage you that when the road gets hard, remember your listeners. You're doing this for the right reason. God bless you.
The opinions and recommendations expressed by Dan are his own and do not necessarily represent the opinions of this station or any of the show's sponsors.
Welcome back. Financial Issues. I'm Dan Celia, 866-300-9298. All the major indices in positive territory. Why? I don't know. But they are. I know that. And I guess we're happy. But anyway, they're all in positive territory slightly. They're looking like they could be headed into negative territory. But apparently the consumer spending idea, forget the fact. Listen, so what? 71% of our economy is dependent upon consumer spending money. So what? Earnings of companies are dependent upon the Fed. So what do we care about consumer spending anymore? It's ridiculous. Why do we even talk about it? Why do we even give these numbers out? I don't care that the numbers are down. It's irrelevant. So all the markets are positive territory. And the good news just keeps rolling on. 866-300-9298, Rapid Fire Friday. Let me go to Eric. Eric's calling us from Iowa. Hi, Erica. Hi, Eric. How are you?
Hi, Dan. How are you?
Good.
Good. Thank you so much for your ministry. We partnered with you back in the spring, and it's been wonderful getting your emails and updates and alerts and all the information that comes along with it. It's been great. So thank you for that.
Thank you.
Just a little background. I just have a question about starting up investments. My wife and I are 30 years old. We have 3 kids, 4 and under. I'm a teacher, a third-year teacher, and my wife stays at home with our kids. The only debt that we have is a $45,000 mortgage. However, we don't have any investments or any retirement accounts right now.
Okay.
We only have about $10,000 savings, kind of as an emergency, and maybe bringing in about $200 of monthly discretionary income.
Okay.
And I hear you talking about all these different, preferred stocks, common stocks, bonds, Timothy Fund, charitable gift annuities, and other investments. Right. And I was wondering for where we're at right now, for how young we are, kind of how little we have right now, what would be the best option for us?
I would say this to you, Eric, and this would absolutely, in my opinion, be the best option for you. I would open up a Roth IRA account in your name because you have the earned income. So open up a Roth IRA account. Now, here's the thing, Eric. I don't care where you open it. You can open it at the bank for now, which would probably make the most sense. The bank in which you do your banking, your checking account and such. So I would open up a Roth IRA account. And all I want you to do is every month have $100 of that $200 discretionary income going over to your Roth IRA account. The other $100 I want you to continue to put into your savings. Now, I kind of feel pretty good about the fact that you have $10,000. And I'm not necessarily making a case to grow that $10,000 a whole lot more. But that's where I'd like for you to put it for now, until we get through the next year or so and we start seeing the dust settle, if it does, on not only on our political, geopolitical events, but the political events here in America, until we start seeing some settling in that and some stability coming into the economy. And then we can decide where we might put the extra money that you have in this emergency savings. So for now, that's what I'd like you to do. Now, here's the thing. So you're going to have automatically every month or every pay, maybe it's $50 a pay or whatever, coming out of your checking account and rolling and moving over into your Roth IRA account. Once that Roth IRA account accumulates to a few $1,000s. Then I would probably want you to close, I would want you to close that Roth IRA and open up a new Roth IRA account in a brokerage, either at Timothy Plan or in an online brokerage, one of the TD Ameritrade, E-Trade, Scottrade, Schwab, one of those, and begin to do some investing either in individual stocks or Timothy mutual funds. If you open that Roth at Timothy, then you use their mutual funds. But that's what I'd like you to do. And I think, and here's the reason why I'm not saying you got to get all that $200 in there. And you're 30 years old. If you can maintain that very discipline, even at the current levels of your discretionary income, you're going to be in great shape. You're going to be in great shape. And maybe, and I'm talking about great shape when you retire someday, and maybe your savings account grows to a certain point in a couple years that we say, you know what, let's just pick off a slice of that and throw it towards your principal. But at the same time, $45,000 mortgage, and it sounds like you're plugging away at that, that obviously, when that gets paid down, is going to free up more discretionary income. So I think you're in a really unique, a great situation, Eric. You and your wife have obviously been pretty disciplined savers and pretty disciplined about staying out of debt. That is going to have just so much benefit to you guys over the next 30 years and to your children. So I'd keep, doing what you're doing. I just would split it. I want you to open a Roth IRA account because you have to have some sort of retirement savings, and that's the best place to start.
Wonderful.
Does that make sense?
Absolutely. Thank you so much.
All right, Eric, thank you, and I thank you for your support. It's a blessing. I sure appreciate it. Let me go to Rich in Texas. Hey, Rich.
Hey, Dan. Good morning.
Good morning.
I'm a partner, and I read your email yesterday. About a month and a half ago, I just had $3,000 sitting around and went ahead and put it in Enterprise Partners.
Uh-huh.
And it's been climbing like a barn burner.
Yes, sure.
I'm like 8.5% ahead now after commissions. What do you think? Just go ahead and take my profit now and get it later on again?
Yeah, I mean, I wouldn't sell out of it. But I would sell enough to get some of your profit off the table, and then continue to leave your cost basis working for you. Continue to leave that go. And if it does, pull back, and it will pull back when the market pulls back, I would put some more money into it. I think that would be a good strategy. Rich, how old are you again?
76.
Yeah. I mean, I think that's a great strategy to do. It has been good, and I think it's going to, possibly continue to do as good as it's been doing. But I like that strategy. I think it makes a lot of sense. If we do see this pullback, it's going to. I mean, they work in a very good space. I like them. I even considered putting them back on my buy list. They're paying that 3.5% dividend, which I really like. I hope you're taking that, or that's going into your money market account there. But one way or another, I think it's always a good practice to take it. When I look at it over this year, we haven't had much dip in the stock. It's been down to 28. I don't know that we're going to see it come back down to 28 over the next 12 months, but it could come back down to low 30s. And I think when it does, I think that would be a great time to enter in and buy some more.
If I put $3,000 into it, you say I should take, how much of that should I take out?
Well, so, I would take out as many shares as it takes to get that 8% profit. You know what I mean? So right now it's selling for $40 and some odd cents, per share. And so whatever you have in gain, which, is whatever it is, not that many. It's a few shares.
I got you. So I have my programmer says my profit is $3 a share. So just take $3 times how many shares I have.
There you go.
Okay, great.
And then divide it by $40 and sell that many shares.
Okay, great. Thanks, Dan.
All right.
God bless you.
Thank you, Rich. I appreciate it. Let me go to Sharon in Alabama. Hey, Sharon.
Hey, good morning, Dan.
Good morning.
I need some in my portfolio, this category that DBC is in.
Uh-huh.
But explain to me how we make money on this, since there are no dividends and it seems to move in a narrow range. How does that work?
Well, it does move in a narrow range. and it hasn't always, but it does move in a narrow range. For those not knowing what that is an agricultural commodities. It's an ETF, and it's an ETF product that is primarily in. It does have some oil, some energy in it, but it also has some gold, and it also has corn, soybean, wheat, cattle. It has other commodities in it. So it's a commodity, a play. And so, if you look at it over a 5-year period, it's only up 3% because it does trade in a narrow range, but it gives you some protection on the downside when commodities may continue to do well. I happen to believe a lot in agricultural commodities and energy commodities, and this is combining both of them. So it has been a narrow range because, frankly, it just hasn't been doing anything. It's just not going anywhere. But that's not to say it won't. It is not something that I would sell by any stretch of the imagination, and I would continue to own it, and until we get that good bump up where you're up, 12-14%. But
you anticipate conditions that would sometime in the future make it go up?
Oh, absolutely. I mean, I'm anticipating that it's going to break out of the narrow range that it's been in.
Mm-hmm. I see. Well, I'm accustomed to your other buys that
you're
made
spoiled.
so much money.
You're spoiled.
Okay, one other question on these stocks that we buy that are from other countries like State Oil. Do the other countries all tax your dividends, take a chunk out of your dividend payment?
No. So what will happen is when you get you'll get a 1099 from your broker, and you'll see the dividends for Stat Oil, for maybe Logitech, if you own Logitech, or any of those foreign companies. You'll see that being treated differently on your 1099. And when you do your taxes, that's going to get filed under. You'll see a space for that if your accountant will, or whoever does your taxes, or if you do them. You'll see a space for that kind of income, and it'll be treated a little bit differently when you file your taxes.
In an IRA, you don't have to worry.
No.
Okay.
IRA doesn't matter. Yeah.
Okay, but all foreign countries don't do that. All.
No. No, that's going to be done through the IRS. They're the ones that are going to treat that differently.
Oh, what I mean as far as taxing your dividend in that country.
No. Mm-mm, no. If you are they will do it if you're a citizen of that country. When you file your taxes, depending on the country, you're going to have to pay capital gains or whatever it might be.
Okay, but being an American,
it's treated. It's just it's just all we got to worry about is the IRS.
Okay, all right. Thanks, Dan.
Okay, you're welcome, Sharon.
Bye-bye.
All right, bye-bye. 866-300-9298. Listen, we've got 3 lines open. We're headed to break. Fill them up during the break. As soon as we get back, we're going to go right to phones. So if you call in now, you're going to be the second caller we get right after the break. 866-300-9298, 866-300-9298. It's Rapid Fire Friday. We're taking a whole lot of calls, and we're going to continue to do that. I missed that, Devin. So, folks, I just want to remind you one more time as we go into this break. Check out Up TV Monday night, 9 o'clock Eastern Time. 9 o'clock Eastern Time, 8 o'clock Central Time. American Family Studios, the first featured film called Summer Snow. You want a movie that you and your family can sit around and watch. It was it's the number 1 movie that is premiered on Up TV so far this year, the second highest premiere all time for Up Television. It's a great movie, and you have another opportunity to see it. It's going to be Monday evening, Up TV. Search your cable and your menu, and you'll find Up TV. Hope you'll check it out. I'm Dan Seal, your Financial Issues. We're going to be back after this. We're helping you be the best steward you can be with all the Lord has given you.